Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Andrew White from Char Technologies to give us an update on the company. Char Technologies trades on the TSX Venture Exchange under the symbol YES. The company is trading at 84 cents with roughly 71 million shares outstanding, or about a $59 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks, Trevor. Great to have Andrew back with us today. For those of you that joined us on the first call about 6 months or so ago, we've got a fair bit to catch up on. Clearly, Andrew's doing something right. Stock, when we first interviewed him, was at 14 cents, and today I believe we closed around 84, 85 cents. So quite the return, and certainly likely on the basis of some stuff that we want to hear about today. So Andrew, great to have you back. And of course, as we always do with these, love to have you give a bit of a sort of a summary on what the business does, and then we'll jump into some questions.
Absolutely, my pleasure, and thanks, Paul, for having me back. I'm going to spend, really just 5 minutes going through the key technology area, just to remind everyone on the call what we do, and to explain to anyone who's new on the call what we do. So our primary technology that we utilize is called high temperature pyrolysis. We have this fairly simple graphic on the right-hand side of the screen here. But what it is we're taking various feedstocks, some of them challenging, things like digestate. Digestate is the byproduct from a anaerobic digester biogas facility, which some people may know about. Biosolids, remainders after a wastewater treatment plant, manure and compost, crop waste, and woody materials, woody biomass, wood waste, railway ties, sawmill residuals, etc. And we put it in this piece of equipment called a high temperature pyrolysis unit. And basically what we're doing is we're cooking it without any oxygen. So by keeping all the oxygen out, we don't burn anything. We're just converting it chemically into two primary products. One is clean energy in the form of a syngas, which we can further upgrade into green hydrogen or renewable natural gas, and a biocarbon, which has a number of different markets, one of which being Biocoal. So when you see the market opportunities on the slide, we're looking at some of the challenging feedstocks as a good market opportunity. Biocoal is one of our biocarbons, and of course, renewable natural gas is a pretty good opportunity for us as well. This is what our facility in London, Ontario looks like, to give you an idea of what a pyrolysis unit looks like. Material, it's continuous, it goes through the center. There's a rotating heat tube in the middle of that big blue box. Residence time, about 20 minutes. Material passes through, and we have it at about 800 degrees Celsius. And that's where our two outputs come. The carbon drops out of the bottom at the end of our unit here, and then the gas goes off to the right. And as I mentioned, it has a number of key benefits. The one that I would just want to highlight here is the third highlight, the energy generation. The system creates this gas energy. A small slipstream of it is utilized to run the system. So, if we make 100% syngas, about 10% goes back to the burners to keep the system running, and about 90% is available for some of our uses. So it becomes self-sustaining from an energy perspective, which is how it's so carbon negative and has such strong environmental benefits. Of the market opportunities, renewable natural gas, of course, most people probably know Zeebeck and Greenlane, who both really focus on biogas upgrading systems, so turning biogas into renewable natural gas. Biogas would be considered a first generation technology, turning organic waste into methane. Pyrolysis, our technology, is a second generation technology. It converts woody biomass into renewable natural gas, as I mentioned, and that's something that a biogas plant cannot do. And just, one of the key data points is that Énergir, the Quebec gas utility, put out a study, or didn't put out a study, commissioned a study by Deloitte that showed for Quebec to meet their RNG targets, over 80% of the RNG in the pipeline would have to come from woody biomass through technologies like pyrolysis, because there's just not enough organic waste to make enough biogas. So that's one of the two gas options. The second gas option is to participate in the renewable green hydrogen space. What's somewhat ironic is that our system, the first gas it produces is hydrogen. That's the hydrogen that we then convert into renewable natural gas. So the market opportunity for RNG is today and is available, and that's why we're certainly pursuing it. But in a lot of ways, it's easier for us to make hydrogen out of biomass, and we're definitely well positioned. This graphic on the bottom is from the Ontario Hydrogen Commentary, and you can see that the biomass to low carbon hydrogen as a green hydrogen pathway is identified, it is known, and it is accepted as a pathway. And finally, the last slide about what we do, and I think it segues nicely into some of the updates we want to talk about, is on the solid side. So one of our biocarbon products is a biocoal that can be used in the steel industry. The reason they're interested in it is just for greenhouse gas emission reductions. Every ton of coal that we offset with 1 ton of clean fire in the blast furnace actually reduces greenhouse gas emissions by about 3 tons. So it's a very low cost way, very limited to no capex to switch fuels, and lets them really reduce those greenhouse gas emissions, which is, obviously a liability as we move forward. And so, just as a quick market summary, the Ontario steel industry alone consumes about 1.7 million tons per year of coal. So it's a very large market, and they can't do anything else. A blast furnace physically requires solid carbon for the heat, but also for the chemistry. So they can't easily fuel switch. They can't get away from coal because of the chemistry going on in those blast furnaces. So with that, Paul, I think that was the really quick summary. So hopefully that touched all of the key bases, and look forward to the discussion.
No, perfect, Andrew. No, I think that's great. Certainly gets us back up to speed here. So since we spoke last, I think there's been 2 major events that I'd like to talk about. One is, a little while ago, you guys did a financing, which with some of our subscribers, myself included, participated in. Maybe just give us a sense of, some of the terms around the financing, but more importantly, what you guys are going to do with the cash.
Yeah, so the financing, it put us on a really strong footing going forward. It was, $6 million raised at 32.5 cents, and then a half warrant with each unit at 40. And we raised $6 million in that financing. And primarily, it will be on building human capacity. A lot of we're still investing in R&D and still doing, development work, but primarily most of that work has been done. We're ready to really hit the ground running on a commercial basis. So we are in the process of hiring some more senior people, in the process of hiring more engineering capabilities and business development, so we can kind of keep up with what's been going on in the last 4 to 5 months in terms of interest in the technology, the ability to deploy it. We're just really building that human capacity to find more opportunities and be on a strong footing to deliver on them.
So why don't we talk about that a little bit more in terms of the opportunities? What do you see as the next step to commercializing the opportunity here?
Yeah, and in a lot of ways, we are commercial. We've got our London facility that is producing product, and I think that's probably the second big item we're going to talk about in a second. And so what we're doing is we're going to take that facility and add on the ability to demonstrate the RNG and the green hydrogen piece. Mm-hmm. But really, it's down to executing on some of these project opportunities that we already have in the pipeline. Things like projects where we're creating green hydrogen from waste, or destroying forever chemicals in biosolids, to turning wood and woody biomass into RNG here in Canada. There's a lot of opportunities, and it's all about focusing on the lowest hanging fruit, the highest probability of success, and really focusing on executing now.
Mm-hmm. So I don't know if everybody's clear, but are we talking these facilities or these pyrolysis machines? Do they sit on site, or you guys build a specific site for them that you guys run and control?
Well, it's a bit of both. And so in cases where we're looking at biosolids, primarily that's leans towards an equipment sale. And the reason for that is it's a well-established industry, at least on biosolids processing. Our system kind of tacks onto the back end of something that's there. They're fairly large players in the space. They've got operators. We're looking to be friends with them. They're looking to be friends with us, and I think that's the best way to get to that market. When we look at things like processing digestate, the residuals from a biogas plant, into things like hydrogen and green hydrogen, we would be looking to co-locate, so our facility on their site, but it would be more of a BOO, a build, own, operate. Not too dissimilar if people are familiar with the model of Linde or Air Liquide, where they sort of build a small plant on a larger facility. Same concept, except we're using the digestate and sending the green hydrogen off site. And that's, beneficial because we're at the right scale to take all of the digestate that these biogas facilities are producing. But it's also an advantage and an opportunity for us because the plants have already expended a lot of capital to build the rest of the plant. So if we can come in and say, we'll solve your digestate problem, we'll build the facility, and we'll just happen to take the green hydrogen value. I think it's a win-win for all the parties involved. Mm-hmm. And then, sorry, the last option, the woody biomass into RNG, would be more of a typical sort of project where it's more of a greenfield because of the scale increase and the need to be on a gas pipeline. You look at a little more of a traditional project development process.
Mm-hmm. And maybe break down, what's the typical payback, either when you guys have a facility or if you were to sell it to, a customer, what kind of ROI is there?
Yeah, it's interesting, and sort of the three kind of buckets that I talked about are slightly different. We'll start with the biosolids one, and that's one that is rapidly changing due to regulation. And regulation is usually one of the big drivers, and it's not an incentive regulation where anything's being subsidized. Mm-hmm. It's you must not contaminate the world with PFAS. So that's beneficial for us. The alternative case to pyrolysis is landfilling. So that's what we can benchmark our ROI on, is the tip fees. Right now, we're seeing tip fees in excess of $50 a ton of biosolids. We expect those to continue to go up. And at $50 a ton of biosolids, we're in a 2.5 to 3 year payback on that side of things. The second one, the green hydrogen, is again interesting because it's emerging. If we're getting California green hydrogen pricing, paybacks can be under 2 years. If we're looking the rest of North America, they're a little bit more reasonable, I think, from an overall perspective of kind of the 3-ish year range. And then the RNG, the renewable natural gas ones, again, if we're getting kind of the really high California pricing for renewable natural gas, mm-hmm. That can again be in that 2 to 3 year range.
Gotcha. You mentioned a little bit of government initiatives. Have we seen anything new or anything that's affecting your business here over the last say 6 months or even further back that are important?
Yeah, mean, the biggest one that I'm sure almost any clean tech company in North America can talk about is the change in government south of the border. That's certainly brought in a lot of new opportunities. And again, for us, it's two-sided. It's one, the push towards economic recovery and clean tech economic recovery, which we see both sides of the border. But the Biden administration also went pretty quickly and pretty aggressively on this PFAS, this forever chemical and biosolids, and that really accelerated the implementation time, I think, for our biosolids opportunity.
Mm-hmm. Why don't we switch gears completely and go to probably the most exciting piece of the last little while for you guys. You guys sold 1,000 tons of Biocoal, which in my mind really validates what, you know, the business opportunity here. Maybe let's talk about that. Tell us what you can about that news.
Yeah, I mean, I think obviously we're very excited about it. It's been in the works for a little while now. And much like I was saying in the presentation, it's really about helping the steel industry decarbonize, reduce their greenhouse gas emissions, while understanding, kind of respecting the constraints they have, that, you know, a blast furnace is, you know, $1 billion+ and requires solid carbon. So, you know, in 20 years, 30 years, maybe we'll be seeing hydrogen blast furnaces, which will be great from an environmental perspective, but, you know, it's going to take some time to get there. So we've gone through a lot of validation of the quality of the Biocoal to make sure it can go into a blast furnace, and this is kind of that next step. You know, they're comfortable putting it into the blast furnace. They know the quality is there, and this is kind of the next scale up to say, you know, we want to make sure it works in the blast furnace and there's nothing that's going to, you know, jump out at us that we didn't think about. And then this, you know, we would anticipate a much larger order that would, you know, validate the construction of a larger facility to meet the demand. So, you know, for us, the RNG market has kind of been validated. We know that wood to RNG is something utilities will accept now. There's contracts being let, we could see them. So having the validation on our other product, our co-product, the Clean Fire, is obviously fantastic, because now we can really take these plants where we're running woody biomass and say, we've got two validated outputs, you know, and they're not insignificant consumers of the product in both cases.
Mm-hmm. Give us, like you mentioned the addressable market that you guys have, especially for Biocoal, but give us a bit more of a breakdown. Who would be your really interesting and sort of low-hanging fruit orders? I mean, are they predominantly in Canada? Are they going to be in the States? Where's the next low-hanging fruit for you guys?
On the Biocoal side, it will be on the Canadian side of the border. There's just a little bit more of the, you know, the stick around costs for greenhouse gas emissions. You know, certainly in the US, we've seen tax credits emerge where, you know, more things are available for carbon sequestration and things are happening. But in the short term, it's still going to be a Canadian opportunity. But like I said, you know, our next scale up plant, which would produce on the order of 1 million gigajoules of renewable natural gas, which is very, very big on a RNG, small from a natural gas perspective, but big on a renewable natural gas perspective, would produce 25,000 tons of Biocoal. And the industry in Ontario, the steel industry in Ontario, is consuming 1.7 million tons of coal. So we don't really have to look that far either. You know, we have pretty good relationships here in Ontario. And of course, once it's seen and observed here, there's the opportunity to expand facilities closer to other steel sectors as those, you know, carbon credits or greenhouse gas taxes, or, you know, however the emissions are going to be priced, they are going to be priced. And that's really the trigger point for a new jurisdiction.
So, so the current plant you have right now, well, it's not a full-scale commercial facility. What kind of revenue can it generate from these products right now?
Yeah, it's, you know, right now it's just producing the carbon. We are in the final design phases of also producing RNG at this facility. Again, it will be a pretty small amount, but, you know, important to show it. So we'd be on the order of, you know, 2,000 at the moment, about $2,000 a day kind of revenue. So, you know, it pays to keep operating the plant. You know, that's net of operators and utilities and the like. But it's not the one that's going to really throw out the cash flow, but it's definitely the one that's needed to, you know, bring people by, to show it works, to kick the tires and get those bigger plants running.
Exactly. And then describe a bigger plant. What does it look like? How big is it? What kind of revenue does that produce? And what the cost is? Yeah.
Yeah, so we could talk about one we're looking at for the RNG, wood to RNG and biocoal. You know, as I mentioned, it'll be about 1 million gigajoules of RNG and about 25,000 tons per year of biocoal. CapEx is on the order of 30 million. You know, equipment, civil works is a little bit hazier because you always got to get a little more detailed. But for equipment on site, that's a very good price. One of the things we do is build the systems skid mounted in a factory acceptance test. So the commissioning risk is much lower, so we can be a lot more confident with kind of those equipment numbers. You know, and then 1 million gigajoules, confidently, you know, we know the kind of average RNG price that we can use is about $15 a gigajoule. So, you know, on the RNG piece, it's about 15 million. And then the biocoal piece, again, because it's a trade exposed industry, really we're looking at what's the price of coal plus the carbon, you know, emission price, you know, minus $1, and that's where we are for our pricing. So, you know, we can assume on the order of $250 a ton when the plant's built, it will be a very competitive price for the biocoal.
Gotcha. And timing, what in a perfect world, if everything goes right and there's no new pandemic or anything else, what would timeline look like for a new plant?
Yeah, and the last piece of the puzzle is getting kind of that LOI initial contract in place with the gas utility. With that in place, the next long lead time is going to be permitting. We can deliver the equipment pretty confidently in a 48 to 52 week period from sort of time of start to go forward. Sometimes permitting takes more like 2 years. So as long as we can get it pushed through the permitting process, you know, we're 24 to 30 months out from having one of these really larger ones running, and that's where we're building, owning, operating our own. You know, I think some of the other opportunities, you know, like the green hydrogen one, or you know, responding to some of these RFQs for the biosolid space, you know, they may move a little faster just based on scale and existing infrastructure and all those important auxiliary factors.
Mm-hmm. And do the paybacks look similar for a big facility like this? Are we looking at sort of 2.5 to 3 years?
Yeah. Provided, I mean, the caveat, of course, is we're getting the RNG pricing, and you know, there's no indication we wouldn't. You know, there are projects that have those contracts in place, and because they're public utilities, you can dig in and kind of get a sense of where the price point was. So we're $15, which is what we use for our modeling, I think is a little light. I think when we're at the contracting table, we can get a little bit higher, but you know, we like to do our financial modeling around the kind of absolute certainty price, and you know, we're very confident 15 is that price.
And are these long-term contracts for the sales of RNG?
Yeah, if you're direct with the utility, it's a 20-year. If you're with some of the intermediaries who are kind of marketing gas around North America, you'd be looking more 5 to 10 year. Right. But that's kind of the range, yeah.
Yeah, so then I imagine there's obviously some significant amount of debt financing that these plants could come with if you've got these long-term sale contracts.
Yeah, it becomes a lot easier when you have a Canadian gas utility with a 20-year contract for the gas. Absolutely.
They usually pay their bills. Yeah, that's
Yeah.
good to know. So that's fantastic. What else do you think investors should watch out for over the next 6 or so months? What milestones or things do you think we should keep an eye out for?
Yeah, and kind of when we last spoke, the next milestone that we were expecting was to move forward on a larger production of Biocoal, and that has subsequently happened. And the next one after that, as we talked about, was looking at a deployment in the gas energy space, sort of the green hydrogen, renewable natural gas. And we certainly expect to have more to talk about. Like I said, with land use planning and permitting, we're not going to have the system deployed in 6 months, but I think we'll have a lot more opportunity and details as we kind of push these opportunities forward and they go from, the pipeline to the backlog.
Andrew, have I missed anything? Is there anything else that I should have asked that I haven't asked?
It's funny. That's one of my favorite questions, and I love to throw it out there. I think from our perspective, what are we excited about? What's going on? What are the next 6 months look like otherwise? And that is, as I mentioned, utilizing the financing we just got to build a lot more capability on the engineering side, on the business development side, and the flurry of activity we're already seeing with kind of the lean team that we have, the awesome but very lean team we have. I can only imagine as we continue to expand our capacity, it's just going to keep growing. So we're very excited about the next 6 months and bringing on some more people to really help us capitalize on the opportunity out there right now.
Mm-hmm. No, I think you guys are operating in some pretty exciting parts of the industry, and certainly, environmental concerns are at high. So I think you guys are extremely topical right now. If there's a parting message or any other key message that you want to have everybody walk away with, what would it be?
Yeah, I mean, I think there's two pieces, and I'll speak one generally about clean tech. I think it's not just having a resurgence. I think we're here. The sort of market dynamics, the policy dynamics, like everything is there to support clean tech in general. And, for us, we're taking clean tech and going into some areas that are really, kind of blue ocean. There's not a lot of people doing biomass to green hydrogen. Most are focused on electrolyzers. Woody biomass to RNG. Most are focused on biogas. And PFAS destruction is just something that only pyrolysis really can do. And there's a very, less than a handful of competitors out there. So, for us, it's just, we have the opportunities in front of us and we're pushing on the execution piece now.
Well, congratulations on some pretty significant milestones recently. If anybody wants more information, what's your company website?
It's chartechnologies.com. We have just done a refresh on it. The investor tab is coming soon. We're pushing our team hard to get that tab up, but the rest is up there, and so is all our contact details.
Awesome, fantastic. We've had CEO Andrew White from Char Technologies. Great to have you back, Andrew, and we look forward to catching up with you in the not too distant future.
Yeah, it was a pleasure, Paul. Thank you.
Awesome. Thank you so much.